The New Zealand dollar once again topped 80 cents against the US dollar overnight. The reason for the strength in the New Zealand dollar came after inflation expectations came out higher than expected. This supported purchasing of our currency, especially out of the US and out of Germany. Overnight, US stocks were once again down. This is despite commodity stocks rebounding their most in 2 weeks. The reason for the rebound in commodity prices is the fact that Goldman Sachs put out a forecast saying that they have turned bullish on commodities-based stocks. Also, Morgan Stanley increased their forecast for oil prices by about 20%. Despite the rally up in commodity prices overnight, oil does still trade below $100 US a barrel. This is despite being as high as $114 over the last period. The major news yesterday in New Zealand's time zone was the Reserve Bank of New Zealand's inflation expectations for the next 2 years. Despite recent data indicating that there was no pressure on inflation at present, inflation expectations did tick up to around 3% over the next 2 years. This is despite last quarter's forecast being around 2.6%. It is likely that the Reserve Bank of New Zealand will take some discomfort from this particular forecast. The reason for the increase in inflation expectations is the fact that construction activity in Christchurch will likely put some pressure on inflation as more people go into work down in the Christchurch area. The Reserve Bank of New Zealand's normal band for inflation, or acceptable band for inflation, is from 1 to 3%. Up until now, there's been no signs of any inflation, and last quarter's inflation data came out at only 0.8%. Despite this higher than expected inflation indication, we're still expecting that the Reserve Bank of New Zealand will hold the official cash rate at 2.5% until at least March of 2012. Whilst all the number junkies and economists were really focused on the inflation expectations, my own personal preference and that of cowcockies around New Zealand will be the fact that Fonterra announced their 2012 forecast payout. The payout came out right on our expectations at ASB, focusing around a $7.20 per kilogram of milk solids forecast payout. This comprises a $6.75 milk cheque and around a 40 to 50 cent distributable profit. Demand continues to grow for our dairy products from China, and this means that dairy prices currently remain about 2 times greater than their 2007 historical average. It is likely that continued strong demand for the Asian countries will mean that demand will outstrip supply for at least the next 2 to 3 years. This means that we can see that dairy prices will remain about 2 times above their historical average over the forthcoming future.